Good morning, my friends. It's Wednesday, June 1st. I'm Marv Eisen of Timeless Dollar, and we start out the day, at least I do, looking at the economic calendar to see if there are going to be any market-moving news that are scheduled to be delivered throughout the trading day. And today there are a number of events scheduled, but the one that caught my eye is right here at 2 p.m., the Beige Book. Now, for those of you who don't know, the Beige Book announcement does have the potential to move the market. Beige Book is a report released 8 times a year by the 12 Federal Reserve districts, by the banks in those 12 districts, a report of the economic conditions in those districts. So the Beige Book could potentially have an effect of moving the market at 2 p.m. I don't think it's going to be a great potential to do that, but just mark that on keep that in the back of your mind. It might be moving the market and you might want to be sitting on the side at that time. Moving over to the morning news, flags are in the green, all in the green. 3 are good, 2 are The 3 that are good, of course, are the Dow, S&P, and NASDAQ. And when I say good, I'm talking about the bulls who have been battered since the first of the year. Oil and 10-year treasuries, interest rates, they're still on an upward trajectory. They have a negative effect on the market. Now, speaking of the market, yesterday I showed you guys in my video, my trading zone for the day. And so here it is, and let me take you from there and see how well the trading zone did. And here is my calculated trading zone for the day. I'm going to show this to you guys. Every day I use Taylor's book method, Taylor's trading technique, to calculate the area where the market is likely to trade for that particular day. And I always... Okay, so how well did prices trade within that trading zone? Well, as you can see, prices opened up in the lower half. They didn't close the gap. They went down, in fact, and traded outside the trading zone for about an hour, maybe a little less, and stayed around the morning support level, the calculated support level, before actually closing the gap up at 41.56. I put the trading zone up on my chart as a tool, as I said yesterday, as a tool to give me a perspective of where the market is likely to trade based on several previous days' past price movement between lows to highs and highs to lows. So the market does obey the trading zone for the most part. You need to know how to use it. I provide this information in my daily trading zone report that you can get by subscription. In fact, you can get a week's free trial, and I suggest that you do it. It's better than having a blank screen, right? Because otherwise you just have a blank screen. And so I use the trading zone and I use the previous day's close as guides to determine where the prices may gravitate. So yesterday the trading zone was accurate. The gap did close, although it took some time to get there. And you need to have some perspective. Yesterday showed some volatility. The typical trades that I teach, GST, TMC, gap, support and resistance, time and price, trend, momentum, and candlesticks, those are sort of evident on the chart, but yet because of the volatility, you had to be really staying at the computer for the most part during the day and really be prepared for the move when the market decided to move there. At any rate, thanks for watching. It's about an hour before the market opens. I'm going to get this up on YouTube, and I'm not going to show you my trading zone today. If you want to get it, go to my site at timelessdollar.com. Subscribe. You get the first week free, and if you don't like it, you can cancel, of course. But it'll give you perspective on where the market is likely to trade. So you have a great day. Use a lot of patience. Thanks for watching, and I'll see you in my next video.